All right, welcome to The Big Picture, the show where we talk about micro market structure as well as macro markets. Today, I have with me, of course, my ever-present guest, David Brickell, our resident master of macro. And again, for the second time, we have Steve with us. Steve, this might become a regular thing if Joe keeps bailing on us because he's in the Bahamas right now having a great time while we're stuck in the office. And we also have two very special guests with us today from QCP. So I will let you guys introduce yourselves. Simon, if you want to go first.
Okay, sure. Yeah. So I'm head of derivatives at QCP. Run a small but very talented team of traders. We market make crypto options onto Paradigm, of course, great platform, and onto the exchanges, and and to our global customer base as well.
Perfect.
Yep. My name is Han, and I'm one of the supposedly talented options trader under Simon. Yeah, I've been in QCP for more than 3 years. Been an execution trader, and ever since Simon joined, we stepped up on a derivative side, started market making, and my focus has been all there. Yep.
Perfect. Thank you. It's nice to actually meet you guys. So I think today we kind of went over flows earlier this week, and we released that podcast. But if we want to, or Steve, if you want to, can you recap some of the flows that we're seeing, or give us a brief update, and then maybe Simon and Han can speak to that.
Okay. Yeah. So as we kind of spoke about the other day, on the big picture, it saw a ton of topside buying. Takers being just super axed, and everyone kind of FOMO buying, and kind of a confluence of events of CPI as well as a spot rally, and it was really exciting, and kind of saw the return of the natural taker. I would say, given this is just in the last day, the flows, there's been some notable closing of risk in topside. We saw a big block of these 25K March calls get sold yesterday, as well as some downside buying, right? So it's a bit of selling, bit of a shift in views from takers, but kind of as implied vols have just cratered this week. Maybe we do see some risk come back on, but that's just kind of my view, and curious to hear your guys' thoughts on it.
Yeah, maybe Simon, you could give us a.
Well, I mean, so number one, the context of all of this. What a fantastic start to the year, right? Big redeployment of risk. It's we find it super encouraging after coming out of December, and it being so quiet, so little risk on the table, and this massively rangy market. It was a huge relief for us to see. Well, number one, all of these big tickets going through, right? I mean, in terms of even compared to sort of early last year, we're seeing a lot more very large tickets going through, and these are clearly directional tickets. It's to hedge underlying deltas, or to play specific topside, but this isn't vol book trading. This is directional deployment of risk. But yeah, saying that, after this massive rally up last week was this week still was a little bit in a long week. It's been a little bit frustrating, right? We've spent a lot of it stalled at this 21K level, and all of these big premiums that got paid at the high starting to decay, and people were just waiting for a move one way or another. It looks like, I mean, from what we see, I agree completely with Steve that there's definitely been some risk taken back off the table. And just tracking OI open interest numbers, there's definitely some trades that have been closed out there, and things reduced. But Yeah, I think the larger part of the risk is still out there. It's still very much deployed, and any sort of pullback on the vols that we're seeing at the moment is going to be pretty short-lived, especially in the extreme front end. I find it difficult to believe that that spot can. This doesn't feel like a point of equilibrium, right? And it's definitely a very different market to what we saw in December at 16K. This is a market that wants to see something, wants to do something. It's just a matter of time before we break one of these levels and continue either continue the move or retrace back to 16K level.
I mean, I believe you guys already covered the options traded volume a couple of days ago. Yeah, the amount of risk being put on was comparable to the Luna crash we had last year. Yeah, it was quite surprising. But unfortunately, the big prank by the DOJ caused a lot of risk off to the market. Yeah, and we did see a lot of people taking profit on their long positions. But as soon as vols sort off, we also had people trying to pick up the lows and continue being bullish. Yeah, which also shows that there's still a lot of capital undeployed. Yep, and like what Simon said, yeah, it's not a point where we see spot settling down.
It was interesting to me, like the DOJ came out at the worst possible time, just because we were just breaking up, right? We were just starting to break some levels. I mean, there's some interesting levels in Ethereum that I was looking at, and we kind of, we just broke that 1600, and everything was getting bid up. I think as well we saw implied vols like this week actually sort of trading below realized as well. So I think we're at interesting times, and in other markets as well, like be it the dollar sort of testing some interesting levels. You've had S&P at like the 200-day moving average. So it kind of feels to me that markets just want to break out. And I guess what would be disappointing now if we just kind of mean reverted. But I think the DOJ, I mean, that just seemed ridiculous given the fanfare they kind of announced the announcement. And it kind of sort of whacked us off at some really big levels, but encouraged like how well we've actually stabilized in the market and now sort of grinding back towards some of those highs. I'm just looking at Ethereum here, sort of pushing towards 1600 again. So yeah, it feels like you guys say, it feels like the market wants something to happen. It feels as well like the market's still not got enough length on. So still wants to sort of increase its length and looking for opportunities. So yeah, it was interesting actually, Steve. Our flows sort of late in your US session yesterday saw some good deployment of topside again. So
yeah,
that's a good point. I feel, yeah.
Han and I were chatting about it while it was going on. Like it was such a not like a huge flurry in terms of size, but just just buying a lot of buying of wings. So we'll kind of see. And speaking to the taker on it, and I mean, there's a chance that we rally into the Fed coming up first week of February there. So I think some people are getting in position for that.
I agree completely that I mean I'm surprised how robust BTC in particular has been. In the middle of this was proper fear and panic when we saw the DOJ announcement of the announcement, like you say. But coming out of that, S&P's dropped down to S&P's looking pretty sick, right? And yet crypto's holding up remarkably well. We were all sort of set up, ready for that big squeeze, drop lower, wash out of short-term longs. But the fact that actually we held up quite well, even whilst equities were dropping, and even as we talk, it's putting back in a rallying back up to the highs. I think it's looking pretty positive.
We are talking, that's why it's rallying, Simon.
No one's watching yet.
Han, what's your view on vol and sort of vol? Like, I know we talk about it, but if you could give some insight there.
Yeah, I mean, BTC has been trading in 15 to 25 7-day realized vol last December. Very boring market, and it's incredible how it got pushed up to 60, 70 handle this year. And you saw that implied vols pushed up as well. Mm-hmm. I mean, this kind of short-term movements is quite susceptible for the front-end vols to move a lot, just because it's driven by spot. But one odd thing that we saw was the back-end vols moved along with the front end, and we had 10 vol movement in ETH, June, Tenor for the implied vols over 4 days, which is very significant, I must say. And that's the part of it, right? Volatility of the volatility. But it's also a function of liquidity. I think that we are seeing quite limited liquidity in the space for the options market compared to the amount of the risk that is being put on. Yeah, maybe Simon, you want to cover more on the trading vol?
Well, yeah, I think the liquidity. I think liquidity point here is very important. To look on the screen and some of the spreads and the volumes, it looks like liquidity is back and everything's fine. But the real state of liquidity is far from what we saw, let's say, pre-Luna. We have lost a significant number of market makers from the space. And especially sort of voice market makers compared to or risk-taking market makers as opposed to the electronic shops. So what we're seeing is markets looks tight, but it's reacting much more to flows and volumes than it did 6 months ago. This is how we get these, there's a 40 vol swing in Friday BTC on Thursday. It was on Wednesday. That's not a market that's healthy and liquid. That's still a market that's a little bit thin and struggling to cover risk.
Yeah, and
that's quite interesting.
There was a lot of wing buying past few days, right? Yeah, and it's also a way to trade the vol of vol. If you buy the wings and maybe sell at the monies, you do have a profile where your Vega profile increases as the vol increases. Yeah, and the Vega profile decreases as the vol decreases. Yeah, and that's how you trade the vol of vol. And that's why markets saw how vols are moving, and that's why they are quite bid for the wings itself.
Do you think?
Did I get it right, Simon?
Do you think one of the things we kind of thought into certainly throughout December and into year end is that we had this kind of horrible market dynamic whereby volatility was just kind of bleeding lower and lower, but yet we've had all these massive risks out there, be it from the macro side, be it from the sort of post FTX sort of fallout and just waiting for dead bodies to come out. And you're in this sort of horrible position where no one wanted to kind of sell vol, but it was really sort of costing to sort of you were bleeding if you were trying to sort of pick any vol up. Do you think it helps in terms of when given the risks we still got out there, particularly from the macro, when vol's then picking up, like, does it help in terms of almost trading the momentum of that and bring a lot of flow back into the market, because we've just kind of got a stars aligning moment where vol's picking up and we've got risks as well to kind of justify it? What are your thoughts around that?
Yeah, I mean, there's no doubt that as we entered the year, vols were very low. I won't say cheap, because realized is even lower, but it makes it very easy, right? If you want to start the year, deploy a little bit of capital, put on a bet, you're bullish, well, you can do it very cheaply, just by expressing that through call option, a little bit out of the money. Maybe you do a call spread, something like that. But it makes it easy to participate in the rally and to get involved without risking your souls. And I agree completely. December was just horrible, right? It's very difficult to go short gamma, receive decay, which is clearly the right thing given where realized is, but knowing that you've got all of this event risk out there somewhere. But if you're not, then paying theta is just it was just a money losing game all month. So yeah, we tried to keep as sort of nimble as possible and tactical, but still it's not a pleasant experience. I think what was surprising is just how quickly the curve steepened up again now. We had a big rally in the front end and the back end through the first week, but now we're back to some 50 vols again. It's and as you say, below realized, at least for the 7-day stuff. So I mean, there's clearly still an awful lot of front end supply out there, and maybe this is a bit of a sticky area for strikes. I'm not sure.
Yeah, it's interesting. I kind of got in a conversation on Twitter with someone who was pointing out that every time I think implieds drifted below realized, we've seen Bitcoin sell off pretty sharply, and went back and looked at recent periods, obviously around sort of FTX, sort of Luna, and what have you. Now, obviously, there's an element of that is realised by its nature is backward looking. I just wondered though if in this instance, given that we're in this regime whereby vol picks up when spot rallies, like, is that actually indicative of that actually the breakout could actually now be Bitcoin going higher rather than indicating that Bitcoin's gonna sell off? I mean, I guess the implication was implied drifting below realised has kind of normally precluded a big move in spot, and it's normally been lower. But I just wonder if now that, given that we tend to see the pickup in implieds on the break higher in spot, is this move lower actually being driven because the realised vols picked up with spot on the upside? I don't know if this time, always where I'm saying this time is different, but maybe this time is different.
Yeah, interesting. I mean, to me, it makes perfect sense that you'd see this relationship. Where's all this sort of short-term supply coming from? Well, why do implieds go below realized? Well, it's because there's a lot of natural selling there, covered calls, all of the volts. So having implieds below realized is kind of a proxy measure for the amount of risk taking that's out there. Yeah, and if the whole market's heavily leveraged, also a little bit of short gamma out there, it means that you're probably close to a peak positioning, which is the sort of trigger for an unwind. Now, I'm not sure where the unwind trade is, but I'd still tend to think that if there's a risk, it's unwinding of longs and sending us lower. But doesn't, I mean, just from the price action over the last 48 hours, it doesn't feel like we're at max positioning at the moment. It feels like there's still people trying to get in, and it's the break on the top side that people will be chasing.
Yeah, interesting.
Got it. So, Simon, I had a question. So what, I know you mentioned some covered call selling. What do you sort of think about the direction that exotics and like structured products businesses are going?
I think that's super exciting, actually. And this is one of our main focuses for 2023. It could be no surprise to anyone that we expect the exotics market to develop. You look at any other asset class, and that's it's a natural path. And we think there's a lot of compelling reasons for trading exotics, especially in this sort of market. And our outlook for the year is, we don't see any massive rally, at least for the next 6 months or so. Probably we're going to spend a good part of the year in rangy markets, and in those sorts of markets, there's a lot of value in doing double no touches, ERKOs, general sort of structured products which give users the ability to generate yield or on a lower premium base, take a little bit more risk. I think it's the sort of environment that's good for these products, and I expect that this is the year where it starts to kick off properly. We've been talking about exotics for a long time, right? And there's a lot of people sort of promoting the products. There's not a whole lot going through at the moment. I think there's more chatter than there is flow at this stage. But it's quite clear that a lot of people are keyed up, ready to do it, and I think the conditions are there. So I expect to see things go there. And and if I think about the implications of that, well, that's surely going to generate more volume, push vols lower. I think the long-term trajectory for crypto vols is lower. In the same way that we've seen vols compressed in equities, FX, commodities, whenever these sorts of products are introduced. But it's a long game, and there's a whole sort of education process and to be built up around that.
Yeah, I was looking at actually building some structured product vaults, some double no touch structured product vaults last year, but then after talking with the lawyers, I decided it wasn't worth all the regulatory headache, and we just bailed on the project. So I saw that you guys just dropped or there was an article that came out where you guys were talking about your macro view and what's going on with the FOMC coming up. Could maybe, David, could you give a little bit of background, and then maybe you guys, Simon and Han, can both give your opinions on what's coming in the next month or two?
So I thought this was quite an interesting chart. Obviously, I've had quite a bullish view coming into the year on sort of macro and risk generally, which is sort of been quite controversial, I think, and it certainly feels like it's been the contrarian view. But basically, sort of in a nutshell, the idea that throughout 2022 it was all about the Fed hiking, inflation, and we're now transitioning to this kind of peak inflation, peak rates, peak Fed narrative. We also had such an extreme tightening of liquidity conditions throughout 2022, and I kind of feel that some of that's easing. Now, I know the Fed are still doing quantitative tightening, but there's just signs out there that actually liquidity is improving in the market. This chart here, you've got G4 central bank balance sheets combined. So essentially, China and the Bank of Japan are offsetting what we're seeing out of the US and the ECB. So we kind of sort of got, you can see central bank balance sheets are sort of ticking up again. There's also as well, and I think this was in the article as well, you alluded to it, but in terms of the Fed's balance sheet, on the one side of it, you've got quantitative tightening, which is going to sort of reduce it. But then there's two other sort of quite key elements to the Fed balance sheet. So they have the reverse repo, where sort of funds and banks are able to park funds overnight with the Fed. And then you've also got the Treasury General Account, which is essentially the Treasury keeping cash balances at the Fed. Now, long story short, when those balances are rising, it's a drain on liquidity, and when they're falling, it tends to improve liquidity. Now, the RRP balances have been slowly falling. They're above sort of 2 trillion at the moment, but they've been falling basically as sort of front-end yields, and with the Fed hiking are attractive, that money's coming out of the RRP and back into the markets. And then the other interesting thing you've got is with this debt ceiling, the Treasury are having to draw down on their cash, on their TGA cash levels that they hold at the Fed, rather than being able to issue debt as they hit that ceiling. So again, that sort of drawdown on the TGA is going to inject more liquidity into the market. So I kind of actually feel liquidity conditions are improving, and then that we're also sort of moving into this, Fed pause. And pause typically followed by cuts whenever they come. So I just feel we're in a different sort of macro dynamic to what we've been in throughout 2022, and maybe sort of markets are starting to sniff that out a little bit. Certainly the inflation data's played into it. I thought Brainard was quite interesting last night, and that she didn't really push back on market pricing for 25 bips in front of the PEB and another 25 in March. So again, it looks like we're going to get a slowing down pace of hikes towards the pause. And then I think the macro world looks a little bit better than it did in 2022. So long story short, I think the macro looks a lot better in 2023 than it did in 2022, and it feels like liquidity conditions are actually easing as well, and even financial conditions are actually ticked positive. I think Justin, you shared a chart earlier showing that as well. So I think the macro backdrop is more constructive for risk and for crypto.
Yeah. So if maybe Han, you could give us your view. I know I read through the QCP article this morning, and it seems like you guys were saying that basically the punters here in crypto are still driving markets higher, and the Fed needs to quash that enthusiasm, right? So yeah, take it away.
Yeah, I mean the Fed definitely has to manage some of the expectations of the market. That's what I think. Quite tough to say whether the market will go against the Fed and like how things has been rallying. To some extent, yeah, the financial conditions are easing, but it all depends on what will be the dot plot will be in the March FOMC, right?
I mean, it's interesting, like Han, like the market. I mean, look, the Fed keeps sounding hawkish, and they. I forget how they phrased it in terms of they don't want this unwarranted easing, and they don't want markets front running them and undoing all their good work. But the market keeps ignoring them, and you're seeing that in 2-year yields. So yeah, it's going to be interesting because I think they're going to want to sound hawky. But yeah, the market. It's almost like the more they try now, particularly given how poor the data's been, the less credible it feels to me in a way. And the market's looking at the data and not really sort of listening so much to the Fed.
Yeah, I mean, it does look like the market's got a little bit ahead of itself, right? I mean, Fed's the ultimate master here, and to we've got, a 1% gap between expectations and the Fed's own projections. We think that first to Fed FOMC is important. Okay, we're down to so let's say we're done on 25 BPs, but there's room for surprise there. More key though would be the 22nd of March one, where we get our dot plots and get to see their rate forecast. I think that'll be massive for the market.
And it also overlaps with the ETH Shanghai, right? So that could be quite interesting one. Might see some volatility there.
Yeah, absolutely. I'm surprised how much focus there's been on June contracts. June ETH has been trading very actively out there, but in our mind, the real interesting stuff is going to be happening in March. The conversion.
How do you guys look to position for that?
Oh God.
Sorry, the March stuff. I
Yeah.
I mean, in general, it's yeah, it's like a lifetime away still. But we're positioning long for the 3rd of Feb FOMC, long in terms of gamma options. We tend to be more directional on vols than we are on delta, and we think that March is good value on the curve. So we're long that against short June. In fact, a lot of the, for the reasons we talked about, exotics and stuff like, we're short a lot of the back of the curve.
Okay, perfect. Taking notes. long March, short June. Let's go.
See the RFQ pop up. I know who's.
You guys, you mentioned the Shanghai upgrade. Are you guys seeing sort of clients sort of actively positioned for that? And does it feel like merge type strategies and structures that they're pulling on?
To be honest, doesn't feel like it to me. Market is just a bit more wary on putting on risk for ETH compared to BTC. Yeah, I mean, it's kind of market is saying that there could be a lot of supply unlocked, and it could be bearish, but it could also be a good news. So yeah, and all the focus has been on BTC so far this year. So you haven't seen much big activities on ETH compared to BTC.
Why do you think that is?
Sorry?
Why do you think that is? Why the focus on Bitcoin, not so much ETH so far this year?
I mean, we saw a huge risk off last December, and if people were to put on the risk again, should be the majors that they should be putting on before the altcoin, right? So I think it should be BTC driven, like a BTC dominance takes place, and if things really kick off, then we can see a altcoin season following. Although there has been some altcoin that rallied pretty aggressively before BTC rallied as well. But yeah, I don't really see there's a proper alt season yet until we see a proper increase in the total market cap for the cryptocurrency. We should be led by the Bitcoin itself.
Yeah, it's been quite interesting, I think, as well. The last sort of week or two, some of the moves we've had in some of the shit coins, because like it feels like we can't have a sustained rally without retail getting involved. And it was interesting to maybe see signs of sort of retail sort of getting involved and wanting to ape into stuff again. Yeah, I thought that was quite interesting.
Yeah, that's definitely what we're missing in the market. But I think, because it's been broadly a sort of macro story, it's BTC that's the better way of playing macro. So that's why we're seeing all the focus there. And of course, it's cheaper vols. ETH tends to be a little bit more, story driven, right? It's about NFTs or DeFi or whatever. It's you've got more use cases there. BTC is the macro proxy. So I think it's worth pointing out that riskies are pretty positive. They are better bid for calls than we have seen at any point since the lunar collapse. Right? The vol move over the last couple of weeks has been big. The risk reversal move has been even bigger. It's huge, in fact. This is a sign of a market that these are the sort of positive risk reversal, i.e. calls over. We haven't really seen that since this is a sign of a market that thinks there's more risk of an acceleration on the top side than any of the sort of big potential sell-off events that we can see, right? And that's in the context of the Genesis Chapter 11 and all of these other risks. So I find it quite astounding, actually, that we can be at 20K and change, and already the risk reversals are pricing in an ultra bullish environment. One where people are more concerned about the risk of things going exponential, than they are about a return to 10K and defaults and whatever the next event is. Yeah, so on the one hand, that's great. It's really encouraging, but it does seem to me like it's overcooked, and
It's a bit of FOMO.
we need to normalize that a little bit.
Simon, what have you been seeing in your OTC flows? Like what's kind of the feel out there from takers?
So our OTC flows are sort of overwhelmingly sellers of vols, and so far they've been kind of wary of selling into these levels. I think we can see more supply kick in. I mean, one thing, it's still much shorter dated than it used to be. And I think that helps explain how the curves have got so steep so quickly.
Okay.
Yeah, it's but yeah. So the flows are there, but a little bit more defensive, shorter dated. Yeah, no one's really keen to push things out too far at this stage.
And what about like market making on Paradigm? How have you seen the competition kind of develop over the past few years? I mean, from our side, right? Like certainly more makers. Feels like kind of into FTX, like takers have kind of come down a bit, right? As interest sort of faded, but how have you seen the competition?
It's just waves, right? This time last year, everyone wanted to be a maker. There were, you could point at a dozen names. Now there's definitely a shortage of makers out there. Liquidity is much harder to come by, as we sort of discussed earlier. For QCP, we just try and be consistent. We think it's very important to support the market and to sort of create a sustained growing market. Just need to be in there, and we are, all day, all night, 24/7. But really, the key thing is we're making prices, and we're not running away when you see a little bit of action, a bit of risk. We want to be supporting it all the way through.
Absolutely.
Cool. Yeah. David, final thought.
Yeah, final thought. Do you know what? I'm just looking at my screens here, just watching ETH just kind of grind higher. I'm hoping it's going to give us another interesting weekend like we had the other weekend, where we get some sort of gamma chasing and a little bit of FOMO. So yeah, I still think price action looks like quite constructive in spot, and it's kind of supported, as you're saying, Simon, in terms of the sort of flows to put on top side. And yeah, I still think into the Fed, we've probably got a week or two of risk trading pretty well as we kind of play this sort of pause narrative, rates coming a bit lower. So yeah, still constructive. I imagine then as we get into the Fed, end of Jan, things go a little bit quieter. Some money gets taken off the table, but yeah, it feels like people still haven't got the length that they want in this market and are looking to deploy some capital. So yeah, I think that's constructive for our market over the next couple of weeks at least.
Well, thank you guys for coming on, taking the time to talk with us. I have to get off this call and go YOLO some ETH calls right now.